Our next speaker is Sal Perillo. Sal is a partner in Nehmad, Perillo, and Davis, which has offices in Egg Harbor Township and Avalon. Sal has previously served as a corporate counsel for the city of Newark, county counsel for Atlantic County, and mayor of Ocean City. Sal's practice concentrates in the area of real estate, commercial litigation, and real estate tax appeals. Please welcome Sal Perillo.
Thank you, Jim. When I was mayor of Ocean City, the smartest thing I did was asking Jim Rotella to serve as our business administrator. He made my 4 years there a lot easier and a lot more productive. I'd like to talk to you from the point of view of people down in the trenches dealing on a day-to-day basis with both insurance issues and real estate property value issues. First of all, with regard to insurance, how many of you have read your homeowner's policy or your flood policy? Nobody. And I will bet you that the ones who have read it are either insurance agents or people who have had claims and they read them after they had the claims. It's very rare that anybody reads those policies, and what you find when you read them is that the policies are not uniform throughout the state in terms of the homeowners' policies, and that the policies have traps in them, exclusions, that you don't become aware of until after you've got a claim. One of the things that you have to be cognizant of in terms of the insurance policies is that they have limitations in terms of when you can bring a suit. Generally, the limitations are 1 year or 2 years. The Commissioner talked about contract law. Generally, on contracts, you've got 6 years. Insurance contracts have their own limitations, and the time period runs in New Jersey from the time the carrier denies the claim. And after Sandy, there were a number of claims that were denied promptly after the storm occurred, so that 2-year period began to run quickly. While the carrier is adjusting the claim, the courts in New Jersey have said that that period to bring the suit is tolled or suspended while the claim is being adjusted. Policies, as the Commissioner indicated, have flood exclusions, that the policy does not cover any damage from floods. In order to be excluded, the flood damage has to be totally caused by a flood. So if you have a mixed case where some damage is caused by wind, some damage is caused by flood, it can trigger insurance coverage. And then finally, the policies have what are called, and this is the beauty of insurancees, anti-concurrent cause exclusions, which are exclusions that indicate that if you have a covered claim and a non-covered claim, then there is no coverage for the covered claim. The courts in New Jersey, not at the Supreme Court level, but at the lower court level, have dealt with that issue and have concluded that if the if the covered claim is the last effective cause of the damage, then under those circumstances there can be coverage. Commissioner indicated that the Commissioner and the Governor did a very wise thing right after the storm. Within a day or two, the Governor issued an executive order that eliminated the hurricane exclusion in New Jersey for Sandy claims, and he also talked about the non-binding mediation program, which, again, was a very smart thing to do, given the scope of what we're dealing with. The area I'd like to now turn to is an area that Richard talked about, and that is what the effect is of all of the news that you've heard today in terms of property values, and what buyers and sellers and municipal officials need to do in terms of being able to anticipate what the future is going to bring in this area. The combined forces of the new flood elevations coupled with the increased flood insurance premiums that we're going to be facing really has created a fiscal tsunami in terms of the shore communities. It's going to have a dramatic effect in terms of not only the value of real estate, but ultimately the tax bases in those communities, which are based upon real estate values. In Toms River, the effect of Sandy was dramatic. There were 300 homes that were totally destroyed in Toms River. They had a $3 billion loss, which resulted in a $46 million loss in taxes, county, municipal, and school taxes in Toms River. So the effect of these storms and the aftermath of the storms in terms of the flood elevations and the insurance premiums is significant. One thing you've got to be aware of is, I think, All of the legislation that Jerry Thornton and the Congressman were talking about, as I understand it, is going to be a legislation that is going to give us a reprieve from the dramatically escalating insurance premiums. It's not a pardon. So eventually, unless the mindset changes down in Washington, the goal is to make the flood insurance program self-sustaining. And that day, it may not come as soon as it looked like it was going to come, but it's clearly on the horizon. Now, when you're buying or selling property, what do you got to look at? One of the traps that you've got to be aware of is that the datum that was used to figure out the flood elevation has changed. Up until recently, the flood certificate that you get when you buy a property was based upon 1929 datum. Recently, that has now changed under the new regulations to 1988 datum. I thought as a lawyer, what happened is obviously global warming from 1929 to 1988 caused that change. That isn't the case, as I understand it, speaking to surveyors. That's been caused by a refinement in the instruments that they use to measure the level of the water. Mr. Freeholder Thornton, Freeholder-Director Thornton is nodding his head. So regardless of what the causes of the change, there was a good article in the papers about a year ago now by a local surveyor which indicated that on average the change in Atlantic and Cape May counties is about 1 1/3 feet. So if you're buying a property and you look at a flood certification that hasn't been updated and you look at the FEMA maps, you may be thinking that your property that you're looking at is above the flood elevation. If the flood certificate you're looking at is an old certificate, there could be a 1 1/3 difference. So you may think that you are buying a conforming property when in fact you're not. So you got to be very, very careful with that. The other thing that you got to think about is the effect of the next storm if and when the next substantial storm happens. In New Jersey, if your home is more than 50% destroyed and it doesn't comply with the flood elevation, you don't have the option to repair it. You either have to raise it or tear it down and completely rebuild it. How is the 50% calculated? The 50% is calculated not based upon the value of the building. It's based upon the assessed value of your improvements. Those of you who live in shore communities, when you go home tonight, take a look at your tax statement. A lot of you got green cards in the mail with your 2014 assessments. Look at the division between the assessment for your improvements, your home, and the assessment for your land. In most cases, in the shore communities, the land assessment is much, much higher than the improvement assessment. And under the law in terms of real estate taxation in New Jersey, the allocation of the assessment between land and improvements is legally irrelevant. The only thing that counts in terms of real estate tax assessments is the bottom line, the total of those two. So in many cases, assessors try to keep the land assessment portion up and the improvement assessment portion down. So you could have a $1 million property in a shore community that may end up having an $800,000 assessment for land, $200,000 for the improvement. That house, to reconstruct that house, may cost another $1 million. If that house is destroyed to the tune of $100,001, that house has now been substantially destroyed. You can't repair it. You got to tear it down or you got to raise it. The problem that is all going to create from a seller's point of view, from a buyer's point of view, from a lender's point of view, I think is going to be dramatic, and I don't think people have fully appreciated it. The damage from Sandy, the homes that were actually damaged, that is only now starting to hit the tax rolls of the municipalities. New Jersey has a statute, been on the books for years, that if you incur material depreciation of a structure between October 1 and December 31, you can report that to your tax assessor. Your tax assessor has to come out and inspect the property and adjust your assessment for the following year based upon that substantial destruction. Sandy, of course, happened the end of October. The problem is most property owners didn't know to report the substantial destruction of their homes to their tax assessor. They were trying to deal with everything else other than that. So in most cases, the damage that has occurred as a result of Sandy hasn't been the basis for tax appeals last year. It will be the basis for tax appeals this year. So that's going to be the first hit. The second hit is going to be in terms of the valuation of the property from a seller's point of view, buyer's point of view, and a lender's point of view. If you're a buyer coming down to a shore community to look at a house this weekend, and you want to buy that house as a second home, you've got to ask yourself, does that house have compliance with the current flood elevations? If it doesn't, and if the elevation of that house does not comply, then you've got to ask yourself as a buyer, what happens if that house is substantially destroyed in the next storm, understanding this very narrow definition of substantial destruction? Will I be in a financial position to rebuild that house, or will I be in a financial position to raise that house? And if I'm not, what will I do? So that is going to have a dampening effect in terms of buyers of shore real estate. The other thing you got to think about is, what about the flood insurance premiums? If you come away from today with anything, the impression I come away with is I don't know what's going to happen with flood insurance premiums in the future. You know, the Congressman is going to try to rectify that, but I don't know looking forward 5-10 years out what it's going to look like. So I've got to ask myself again, as a second home buyer, in addition to worrying about whether or not I can rebuild or raise in the event of a storm, between now and then, if then happens, will I be in a position to absorb and to pay for substantially increased cost of flood insurance? There are a couple bankers in the audience. What happens if you're a banker, a lender on that property? Well, in a conservative lending environment, which I think is what we're in, a lot of lenders, in my experience, they haven't really woken up to this yet, are going to look at these homes that don't conform with the current flood requirements and ask themselves, if I lend money to Sal to buy that property, will Sal be financially able to rebuild it if it's substantially destroyed? Will he want to rebuild it if it's substantially destroyed? And if he doesn't, and if he ends up walking away from that property after that storm, what am I as a lender left with? I'm basically left with a building I've got to tear down and some land that I'm going to have as my collateral. So I think going forward, lenders and appraisers working for lenders are going to look at those properties and say, I've got to appraise those properties on a worst-case basis and essentially value them based upon the value of the land, and in some cases, maybe even the value of the land minus the cost of demolishing the building. What does that mean for everybody? Well, it means for buyers and sellers that you got to do your due diligence. In the handout that Vicki was good enough to put on your tables, the last page is a clause that we're now using in residential real estate contracts that has a checklist for buyers in terms of the kind of due diligence you need to do now in terms of figuring out what your flood insurance situation is. From the point of view of sellers, you need to arm yourself with the information. You know, first of all, find out whether or not your flood certification is current under the current requirements. Find out what the prognosis is for the flood insurance premiums. If you're a primary homeowner, the market in most of the shore communities is second homeowners. Find out what the second home premiums are likely to be on your property. If you're a municipal official, and I got out at a good time, the prognosis for shore communities is guarded. As Richard indicated, in the short to mid-term, there's going to be disruption. If the values of these properties goes down, that is going to end up reducing the value of the tax bases, which is going to end up requiring people to pay more taxes. And if you end up paying more taxes, a lot of times that could also reduce the value of real estate. So going forward, there's going to be disruption in terms of the municipal tax bases and the municipalities. It is a clouded forecast in terms of what the future for all these areas are. The only thing you can do at this point is try to arm yourself with as much knowledge and be prepared to deal with the problems. Thank you.